Welcome back. You're watching Business Morning on Channels Television. Let's start our conversation now, and we're focusing on the foreign exchange market, looking at matters arising. I've been having a conversation, I will be having a conversation in the next couple of minutes with the Assistant Vice President and Head Research and Intelligence of BGL PLC, Mr. Femi Ademola, and Mr. Wale Abe. He's the Executive Secretary of Financial Markets Dealers Association. Thank you so much, gentlemen, for coming on the program.
Thank you.
So it's interesting times, actually. You know, we've got a lot of pressures coming in from the domestic and, of course, the international markets. And recently, we've seen that, you know, the foreign exchange market hasn't, you know, really gotten much of a breather. But let me start with you, Mr. Abe. What are your thoughts as to where the forex market is at the moment?
Well, if I have to be sincere, I will simply say what you are saying is simply a reflection of the forces of interaction between the forces of demand and supply. So what we are seeing is not unexpected, given the background of the oil drop in terms of earnings as well as the foreign reserves. I think majorly, vis-a-vis some other developments, the political environment, for instance, and so what we are seeing is the reaction of both local investors, foreign investors, as well as even maybe I would call it flight to safety.
In terms of flight to safety now, Mr. Ademola, let's talk about how much the central bank has done lately to ensure that we do not have this much pressure that we're seeing on the foreign exchange market.
Let me just say that I don't know about how much, but the question is that what can they even do at all when it comes to this? I think Mr. Abe had nailed it on the head to say that it's about the interaction of the market, what the market sees, and that's what they are reacting to. It's not about much what they do, because the fact is the kind of exchange rate regime that we use, it is very difficult for you to be able to manage that. No country in the world has ever won a currency war. And what is happening to Nigeria is as like that, like a currency war, when the market believes that your currency is overvalued. And therefore they believe that it's a particular place that it should be. And when it's not in that area, what you see the market trying to do is to drive it to that particular area and therefore it to move. If we use the float exchange rate, nobody will bother. But like I said, the most important thing is about the crude oil price decline. And that one affected us on two ways. In the first instance, crude oil export accounts for about 60 to 70% of our national revenue. And it accounts for about 90% of our foreign exchange earnings. And because we use what we call a managed float system of exchange rate, or semi-fixed, where we keep a particular fixed exchange rate and work around the band, what it means is that we need to use our hard-earned foreign exchange earnings to defend the naira. At any situation of time when there is pressure on that source of foreign earnings, it affected our capacity to defend the naira. So as it is now, what the market is saying is that as crude oil continues to fall, now even lower than our budget benchmark, and we are not able to accrue any earnings as much into our foreign reserve, we don't have capacity to defend the naira as much. And therefore, it is under pressure. And like you said again, the political situation, uncertainty around it, making people say that, hey, wait a minute, what should I do? Let me hedge by keeping this money in foreign currency.
Yeah, but let me take you up on that part where you mentioned that it seems as if the market is reacting to the fact that the currency. Do you now feel that this is what's really responsible for the large spread between the official and the parallel market exchange rate that we're seeing?
Well, in terms of official and parallel market rate, again, that's one of the things, because the market actually work more on the interbank market, and then the parallel market and the BDC and street market, rather than the official rate. The official rate is pegged, and as much as CBN can do, they will make sure that they will walk around that and peg things around that. But there's little you can do around the market, because again, supply comes only from the CBN as much as possible. What CBN has done right now is to shift most of those demand to those other markets rather than the official exchange rate. A lot of things that could have been going to the official market now go to the interbank, now go to the parallel market, and then therefore there's a lot of pressure, a lot of demand from that side. For example, beforehand, if you have brought your money, most of those capital import, if you want to take your money out, you could go to CBN to go and exchange them in the official market. But as it is now, a lot of these money leaving to my country, the demand has been pushed in interbank market. increasing demand in that area, and supply is not actually commensurating with that kind of demand that these guys are having in that area. Because again, we don't have that much money in foreign reserve that we can use to be depending on as much as we can. So we are not supplying enough, because even we are not even earning enough anyway to make the supply. So we have reduced the amount of money we send to the BDC. We have reduced the amount of money that the banks can have. We have even made some stringent measure to ensure that the banks are not just having too much dollars to play around with, so that we can actually manage through, because again, the CBN believe that a lot of demand comes from speculative activities, which is possible anyway. And then the next thing is that, okay, by the time we reduce the avenue for them to be able to access the dollars, we'll probably have done something. But hey, it's not happening that, because the market is seeing something and saying that, okay, because you are managing the Naira and your capacity to manage the Naira is not there. So as far as I'm concerned, that's happening. And again, like you said, a lot of people are doing flight to safety, keeping some money in dollars because of a lot of uncertainty they are seeing locally. And that one, again, is another source of demand that is not very common before. It's not a constant source of supply, source of demand to the market. Now, this area now has added to the demand, and what means that CBN have to do more to be able to cover that gap. But
now, in terms of doing more, Mr. Abe, we know that last week the central bank decided by way of special intervention to sell about $30,000 to BDC operators. What effect did it actually have on the market?
Well, if you take a look at those interventions, especially the one on Friday, at the BDC segment of the market. So I think, first of all, what you had was that because of that major supply, then the rates at that segment of the market actually moderated.
So was it to each operator, or was to a cluster of operators?
No, each operator.
So $30,000 to
yes,
each. Okay.
Yes. So, but the truth is, he said something. What can central bank do? At this point in time, it's a question of just, I think, managing more of the demand side. And there isn't much that could be done, from the supply side. And I don't, managing the supply side is not much you can do, in the short term. But medium term, long term, that's where you can have, you can impact the market. And the issue is not, it doesn't have to do with the central bank. Rather, it has to do with the policy environment as a whole. And we've been talking about the foreign exchange market, and if you recollect, one of the things we've said is that until our own economy becomes more productive, in which case, rather than being an import-dependent economy, you have to focus on the other side. How can you generate more jobs? How can you generate more employment? How can you generate more productive capacity? It is until then you may be able to develop the capacity to possibly moderate the demand for foreign exchange.
Well, but Mr. Ademola, I was going to come to you on that, because you see, we need like a quick fix right now, because in the short term, this is the pressure that we're seeing. And, he's pointed out that, yes, if we become more export-driven than import-dependent, then we could begin to see the pressure ease on the Naira. But that's not going to happen anytime soon. And the central bank has restated and, reiterated it will continue to defend the Naira as best as possible.
That's exactly what I want to talk about. Because the thing about this thing is it's about a lot of things about perception. The market, what the market perceives is what they act about. You mentioned about the intervention of the CBN and how it moderated the rate a little bit in that side of the market. But the point is, for how long would that happen? Again, if the CBN said last year, September, that there's no panic, everything is fine, and anybody that, I know it's speculation, and anybody that speculates, I'm going to punish them, so I'm fine. And 2 months after, there was the devaluation. He sent something to the market that, oh, are you really sure there's no problem? Now, about 2 or 3 weeks ago, the CBN again said something. They said that there's no panic. I know that some of you guys are speculating against that and everything. You're going to be punished. You're going to do those kind of things. The question is, if it is true that there's no worry, there's nothing to worry about and everything, I won't bother to do anything. I'll just leave it, because the market will correct itself. Whoever put his money there for that will get burnt, and then he will understand later he will not do it again. But if the CBN said, don't panic, everything is fine, and the next day they are trying to intervene in the market, that's saying something else. That maybe is not totally true.
So the
There's no
CBN should
panic.
hold off on intervening in the market?
That's not what I'm saying. I'm saying is that we need to really understand the problem really and act in line with that. If the problem is that people believe that the naira is overvalued, let's devalue. In the short term, it might mean that we really... Now, the thing about it is that it may not be a popular thing to do now because of the political situation. It's the normal phenomenon. But the thing about it is that the quick win, that's several ways to it. I've said this before, that the way we practice our monetary policy, sovereign nation, and capital mobility seems to be appearing into what they call the impossible trilogy. And that is a situation where you can have an independent monetary policy, liberal capital control or capital mobility, and then you have a fixed exchange rate. What we have, although we can argue that it's not fixed exchange, but it's semi-fixed, which means that we are still supporting it. Now, once we have those three, now people can bring money in, they can take it anyhow they like. It's going to affect, because when they are bringing the money, it's sweet. Because yes, you can be putting the money in your reserve or whatever it is, but by the time they want to take it out, you may just leave. And unfortunately, the policy seems to have attracted a lot of hot monies. When I say hot monies, that money that are not here to stay, right? So if you bring hot money, it's money that just come to invest in your portfolio, your fixed income market, currency market, equity market. When it is time to go, quickly they go. But if it is direct investment, somebody come to build factory, company to produce something, that it can't just go like that. So it takes some time. We may. Another thing is, so one option I would say is that, number one, we might have to devalue and do it in such a way that the market understands. Now the market is already at 200. What the market is saying is that, hey, maybe our official price should have been around maybe 195 plus or minus 10. That kind of thing, so they can cover all those markets to a large extent. Maybe we need to be going to that level of devaluing the naira to over 200, so that official market will be there. That's one option. Number two is that we might have to introduce what they call capital control, especially for the portfolio side. I'm just saying this to a large extent that, okay, maybe you have to invest and stay for a period of time so that we can manage things. But if people can come in today and go back to again tomorrow and put the money out, it's definitely going to have some effect on how we manage the foreign exchange. So I'm saying that impossible trilogy, we might have to start looking inward. At a time before, we had that thing in place where portfolio investors, they say that if you invest in federal government bond, you have to stay for a period of time. And then, I mean, maybe 1 year before you can sell. Maybe we might have to come to that in order to just temper this thing in the short term. And then you can now go into what Mr. Abe said about the long-term thing. Again, if we devalue right now, it might actually encourage export immediately. In fact, part of the thing, one option that I'm offering to government to even balance their fiscal plan for this year is to devalue. When we devalue, it helps our...
We'll come back to that.
Okay, I just want to add that whichever policy direction you choose, it has implications. I mean, there's no doubt about that. Look, if you take a look at what the central bank has done, I think between November 10th last year up till January, middle of January, about 4.1 billion, dollars, have been used to intervene in the market to defend the naira. And so on the average, you take about average of 3 months, you take average of about 4 billion. And if you take a look at the foreign reserve, which is standing at about 32 now, average of 32 or slightly over that, you discover that by the end of the year, we will be down to about $20 billion. And then that, again, has its implications. So there is a limit. I mean, just like you said, there is a limit regarding to what extent naira can be defended. And that is the reality.
But now, in terms of looking at this market, some have actually said that it should be fused into one. But we'll talk more about that when we come back in just a moment. You're watching Business Morning on Channels Television. On the program today, we're looking at the foreign exchange market and matters arising. I've been having a conversation with the Assistant Vice President and Head Research and Intelligence of BGL PLC, Mr. Femi Ademola, and the Executive Secretary of Financial Markets Dealers Association, Mr. Wale Abe. Both gentlemen are still going to be here with me in the studio when I return in just a moment. Please join us again.